Hey, it's Nick here, and you're in the Transparent FX Academy. I'm a top author on TradingView, and it's time to make another full market breakdown to see exactly what kind of opportunities we can be looking for on the period that we will be analyzing both from a technical and an order flow perspective. So without further ado, let's jump onto the charts. The pair that I will be breaking down into this video is CHF JPY. The reason for which I have selected exactly this pair is because the pair is very near to providing to us a good trading opportunity. So obviously I want to give you guys a full breakdown and show you where we can be looking for the highest probabilities for a nice trading opportunity on it. Now, as usual, I will be keeping the analysis as educational as possible. So first, we will be speaking about the technical aspect of this market. We will then go and see what we have from an order flow by checking the commitment of traders, which is what hedge funds are doing. And we will be checking what hedge funds are doing on the CHF and obviously also on the JPY. And we will be looking at how their orders are shifting in time. And by using then the combinations of our technicals and order flow analysis, we will be able to understand where we can be looking for the highest probability on it. So without further ado, let's get straight to our analysis. Now, starting here from the monthly time frame, what we can see. Now, here on the monthly, we can see that the market is currently testing an extremely strong monthly resistance area. In fact, this zone was acting as very strong resistance here, preceding this move to the downside. Again, very strong resistance here. Preceding this move to the downside, again, the market here hit it and rejected this area to the downside, and again here, and currently we are testing the exact same resistance from which the market can easily provide another rejection to the downside. So from a structure perspective, we're testing the previous high, which is also a historical resistance level for CHF JPY, from which the market got rejected multiple times in the past. What we can also notice here on the monthly is that the market has just provided a nice impulse and correction. Now, generally speaking, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we take our Fibonacci from the low to the high of this impulse, what we can see is that first, the market retraced exactly to the 50%, and then the market broke back above the 0.32 before creating the continuation to the upside. Now, if you're asking yourself, why has the market stopped exactly at the 50%? The answer is pretty simple. The 50% was the Fibonacci level that was aligning the best with structure, specifically with this structure resistance, which was turned structure support here, which the market hit and rejected to the upside quite aggressively here from a monthly perspective. So here in the monthly, we are at the previous high and we do expect a move to the downside. Hey, just a quick thing, make sure you comment below and you let me know which pairs or topics you would like me to analyze or cover in the next videos. Now, going down here on the weekly time frame, what we have seen. Now, here on the weekly, we have seen that the market, first of all, has approached this extremely strong monthly resistance with a very strong bullish momentum. In fact, we had this massive move to the upside that tested the resistance here, and then the market obviously rejected the zone to the downside. We had another test and another rejection, another test and another rejection. So basically what we're seeing is a slowing down of the extremely strong bullish momentum that we had at the start of this move to the upside, meaning that we're basically creating a deceleration in approaching this monthly resistance in the form of this a rising wedge. Why it is a rising wedge and not a rising channel? It is a rising wedge because the higher highs and higher lows are getting always a little bit more narrow. So we can expect the market to possibly reject this zone to the downside. However, in the long term, the market is supposed to break this zone to the upside. Why is it supposed to break that zone to the upside? Because we have seen on the monthly that we have the impulse and correction. And after an impulse and correction, you expect the market to create the continuation to the upside and break above the high. So what we do expect here in the short term is another rejection of this resistance. But in the long term, we can expect the market to actually break above the structure. Now, going down here, down on the daily time frame, what do we see? Now, here the daily price action is at the moment quite clear. We have a market which has just provided a daily W formation. Now, generally speaking, when you see a W formation, what you want to see is the market create a move to the downside to go and complete the pattern at the previous resistance. now turn support. So here from the daily time frame, what we expect is for the market to provide a nice move to the downside to go and complete this W formation at the neckline, which in this case is exactly this previous resistance, now turn support. So we do expect the market to provide this nice move to the downside. Now, if we go and see what we have from a COT perspective, so commitment of traders perspective, which is what hedge funds are doing in the market, on the CHF, what we can see is that with the last report, net positions were increased from 10K to 14.6K. So we had an increase of the net positions with 4.5K longs added with the last report and 28 shorts getting closed. So overall on the CHF, we're seeing an increase of the net positions. So the CHF is definitely getting stronger, and we have already seen this clearly priced in with a nice move to the upside. However, if we go and see what we have on the JPY, we can see that the JPY in the long term is getting even stronger. We went from 14K all the way up to 44.6K net positions. Now in the short term, yes, we do see a decrease from 50K to 44K. But what we're seeing is that overall shorts and longs are both getting opened. Now, yes, with the previous report, we had 4.3K shorts opened and 680 longs getting closed. However, overall, the JPY has been getting stronger. Even if in the short term, we do see some weakness, and we have seen also CHF JPY make this move to the upside. In the long term, we still have a strong JPY since it is not yet a completely risk-off environment. So how we will be approaching this kind of opportunity with students, since there is still definitely the possibility to see a move to the downside fueled by some weakness in the CHF, maybe a retracement from the strength that the market has just created, but specifically fueled by this strength of the JPY for a nice completion at the neckline. How we will be approaching this potential opportunity with students. Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily time frames, those are the best time frames for the direction of the market. But when it comes to confirmations and entries, the best time frame is the 4 hours and obviously the other intraday time frames. So with students, what we will be doing is monitoring price action from a 4-hour perspective and lower during this move to the upside. Until everything will remain bullish as it is right now, we absolutely cannot be looking for any kind of shorting opportunities. However, as soon as the market will shift from a 4-hour bullish to a 4-hour bearish market, at that point, we will be adding CHF JPY to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities at that point for the move to the downside and for the market to complete this W formation at the neckline, which is the previous resistance, now turn support from a daily perspective. If you made it this far in the video, it would be great if you can smash that like button and comment below. It really does support the channel and support the creation of more free education and analysis for all of you. But this is just the tip of the iceberg. I have a full mentorship program that will teach you exactly the rules of my rule-based strategies and also give you every single day a new market breakdown in which I show you exactly how to apply the strategies with entries, stops, and take profits, as well as answering every question that you have every single day, including the weekends. So it's a very complete program. It will teach you everything that you need to trade the market consistently. So I will see you in it. The link is in the description, or I will see you in the next video.